There we go, back again. Let's move that out of the way. I really just wanted to highlight this because it's an example of not only volatility, but also the fact that this is when the market makers and big operators participate. And we can look at any of these really, they're all pretty much the same. This is gold futures on 5, and again, I've got a time and sales window over here. You can see that rolling through and the sort of numbers going through there. And really what I wanted to highlight was this phase of price action here. This is the volatility trigger. We're on, what are we on here? 5 minute, wasn't it? I think, yeah, slid out to the right for some reason. Oops, get that over there, go away. Move that out there. Oh, sorry, I've got this full size. There we are. Let's just drop that out of the way. Let's put that full size. There we go. This is the volatility trigger. But what I want you to note is the amount of volume that's suddenly come in there. Now, bear in mind, this is middle of the afternoon UK time. So, you know, this is not an open. This is not a significant part of the session of the trading day. We've just had this massive injection of volume. And it's come in for one reason. It's come in because the volatility has triggered. It's as simple as that. And when you get the volatility trigger, as I said before, what you're expecting is either congestion or you're expecting a reversal, one or the other. And the reason it's so powerful, it's very simple. It's because volatility equals fear. It's the fear of missing out, because when you see a quick move like that, the market moves very rapidly to the downside. Your instinct as a trader is to jump in, load up, and make some quick bucks. And inevitably you won't, because this is the time when these big operators and the market makers are playing at their strongest. They know how to move the market quickly. They understand the fear of missing out, which is what it is, FOMO. And your instinct will be to jump in, and you will regret it every single time. The beauty of the indicator is it triggers in real time. But what I really wanted to stress was the fact that when you get these candles, you know, expect these big surges in volume. It just tells you, we always say volatility goes hand in hand with the insiders. And it's absolutely true. You see it every single time. That's what they do. The only occasion you don't see it is when they create a trap move on no volume. In other words, they're not participating. So if you see one of these on very low volume, you know for sure they're not participating, and therefore it's going to reverse. But when you see this, then you can guarantee they're in there, they're selling heavily, they're also buying in here, and then you get this ton of buying comes in afterwards, an absolute massive injection of volume, big wick to the lower body, and up we go. Doesn't go very far. We then pause at this point, but then what you see on this next candle is really a signal of what is about to come. Because when you get a candle of this size, which is within the spread of this candle, where you've got a heap of selling in that candle, but you've got a diminishing volume in terms of the same area. In other words, this price spread here is within the price spread of this candle, and yet the volume has fallen away. The question is why? Well, the answer is because it's all been absorbed in here pretty much, and then up we go. But then what's interesting about this candle is, and there's an awful lot of trickery going on in here, you see this widespread up candle, you look at the volume under here, is this an agreement? No. Why? Because this much effort should have a much more significant level of volume. So you know for a fact this isn't going very far. We're going to go into a congestion period, which is literally what we've got at the moment. So it's just an example of, let me just put the time and sales window back up there. Pull that over there again. There we go. It's just an example of, and you can see it on all the different time frames. This is on the 10-minute. There we go. It just stands out, you know, you can't miss it. It just makes the point that when volatility is in action, you will expect to see the big operators coming into play, because that's what they do. They're there to trap you. They're there to get you into a weak position, and they're there to trigger that on volatility, which is all to do with the fear of missing out. So I just wanted to highlight and make the point to you on that. I mean, you can see it up here. This is on a 15-second chart. You know, this is right down the other end of the spectrum. What have we got here? Volatility again. You know, volatility, the upside, ton of volume coming in. It doesn't matter what time frame this applies. It works in all time frames. This is the 15-second chart. It can be a daily chart. We get it on the weeklies sometimes. But when you get volatility, you know what to expect next. And that is so powerful for a trader. It's what volume price analysis is all premised on. It's what this indicator is premised on. It gives you that heads up as to, hang on a minute, I know what to expect next. Now, if you're in a position and you get one of these triggered in your time frame, and I've said this many times before, then 99 times out of 100, unless there's a jolly good reason, I will close out. It's as simple as that, because I don't want to be trapped in either congestion, or obviously I don't want to be trapped in a reversal. So it's just you know, that is the way to deal with it. But if you're in a position and you're in profit, it's great. If you're in a position and you're in loss, that's a different scenario completely. Then you've got a decision to make. You've either got to chance it and hope it reverses with you, or you know, you just take your loss and get out. It's as simple as that. But if you get one of these and it works in your favor, close out, take your money off the table, because if it carries on up here, you can always jump back in again. It's no big deal. You know, I've got this, I've closed out, now it's going down here. Am I happy? Yeah, absolutely, because I've closed out. I've lost nothing, I've banked my profit, and you know, waiting for the next phase of price action. So I'm glad it's come in, because it just makes the point on a very fast time frame, exactly the same principles apply. It doesn't matter what time frame you're in, it works. I'm just going to switch off there and I'll pass back to Anna.